Hey, welcome to Candlestick Cash Radar for the fourth week of March. We've been looking at the short side for a couple of weeks, but things may have changed over the weekend here. We had a big Monday. That's why we wait for Monday afternoon, Monday after the market close before I make these weekly videos, because I want to see how the week is starting, and it is starting pretty strong here. So let's, before I get to our indices, let's look at the sectors over the last month. We know that the SPY has been down about 6%, 5.75. That's getting a little better than it was, but still that's pretty pathetic for the last month. And the worst has been consumer discretionary and technology. But no longer down over 10% in a month, so that's good. The only up sectors have been energy and healthcare at break even. Everything else down. But just a heads up, we're going to be looking at the industrials, which are down only 2% in the last month, and we're going to be taking a look at those. For one thing, let's look at the 1 day, how things performed today. Well, there you go. Consumer discretionary had a huge day, 3.5%. That has been the worst sector for the last 1 month. So a 3.5% rise in a day is the only reason it's still down about 10% in the last month. So that goes to show you how big of a day, what a big turnaround that is. And think about what that might mean for tech, what it means for consumer discretionary stocks, the entire sector. And you see tech had a good day, almost 1.7%, almost 2%. So it was a very good risk on day. Now it was just 1 day, but still I saw a lot of individual stocks at least closing over their 20-day moving average for the first time in the last 1 month. So something to keep in mind. Industrials were up 1.5% today. Told you to keep an eye on those. S&P was up 1.8%. So now let's look at those the big three. So starting with the Dow, let's go to the Dow here, and there it is. That's our gap up today. And see how you close over the 20, which is this green line. We closed over the 20, made this rising window or this rising gap, and so we will look at this as a window that's potential support. So it's really great if you are trading the bullish side of the market. And this was also a key support that it lost a couple weeks ago, around the 424 area. So we closed at 425.5 today on the Dow. Again, you had the stash at the bottom, and you've just brought yourself up back over the 200, over the 20. If we move over to the NASDAQ, you get our Qs with that gap up, close over the 20. You had more of a lower shadow today, but there you go. Also have a window there. And so kind of bullish, still under the 200, so not as bullish as the Dow, but very interesting gap. By bullish, I don't mean we're in an uptrend, but we have the MACD crossover in the NASDAQ, so that's just a positive sign. And same thing with the SPY, your S&P 500, closed at 574. Look at that gap. Very good gap here that we could take a look at. All right. So those are your three indices. They just looked, they acted very bullishly today. So we'll see if they can get any follow through after closing over the 20-day moving average. The 20 is still crossed under the 50, and the 50 is slightly sloped down. So we won't get ahead of ourselves and say we're in some kind of uptrend, but there could be some end of quarter, since we're towards the end of March, could be some end of quarter buying. And take a look at these sectors that they're buying over the last couple of weeks of the quarter. That could be key. We might take a look at that. I'm not going short anything. I'm not looking at anything short this week. I actually want to look at CVS from my pick last week. It was one of the few bullish ones that was working. So see, it was holding the 20 with this nice bull flag, and it just kind of drifted up to around $69. So still over that T line, 8 EMA, and we gapped over that 20, and we traded positively today. So we're right at the top of that Darvis. See, Darvis created by the pivot low down here, 128.30, and the pivot high up here, 134.5. We're right there. So it'll be very interesting to see if we could just break above that. Maybe go right up to the 50 at 135.5. Another $1.50 to the upside for your XLI. That's your industrials. And there is one industrial that I'm thinking about for the long side. That's RTX. RTX Corporation has been in a really good uptrend. See how the 50 is sloped up nicely. Positive stacking. We're in an uptrend. There's different ways we could play this. I'm not looking to play the momentum of it, but we have our Darvis here, so we could just cut that in half and buy it on the lower half of the Darvis, maybe off this blue line here, 128. You have the 50s rising rapidly to it. So, over the next week, if you have a couple of bad days, couple red days in RTX, this really could be one of those XLI names you want to take a look at, as that's just possibly starting to turn around, still in a downtrend. But RTX is not in a downtrend. It's in an uptrend, even though it's the industrial sector is not. So we'll take a look at that. And there's one oil I wanted to look at. So oil, we can look at XLE as an index for your ETF, and oil's getting into an uptrend here. Quite interesting. Fell down, you had your gap, kind of just moved straight up lately. So looking at oil, I thought WMB is in a great, it's really moving into a nice trend here. We have a rising window today. We want to see that consolidate, and you could possibly buy off, if it comes back to this blue line, you could possibly buy off that rising window. Otherwise, maybe we can get a little better deal on this. Possibly you have your 20 crossing the 50 right now. So the 20 is 57.12, the 50 is 57.10. And so you're getting that gold cross right now on the 2050, a 2050 gold cross. And so things are looking up for that one. I would take, if you like oil, if you like the sector, take a look at WMB for a setup. So those are some of the things I'm looking at for the week. I hope that gives you something to look at. And you've been watching Candlestick Cash Radar. Enjoy the rest of your March and Q1, and we'll see you on the other side in Q2.